गुड इवनिंग एंड वेलकम बैक टू पैसा बोलता है। पैसा बोलता है में फिर से आपका स्वागत है। मैं आनंद श्रीनिवासन। आज मैं एक सबसे पुराना से में से एक फार्मा कंपनी के बारे में बात करना चाहता हूँ। 1949 में डॉक्टर्स और मेडिकल रिप्रेजेंटेटिव्स के सब मिला के एक फार्मा कंपनी खोली थी। उसका नाम था इंडियन फार्मा कंबाइंड एसोसिएटेड लिमिटेड। उसका नाम बदल के 64 में इप्का लैब्स लिमिटेड हो गया। 1969 में ये मुंबई में फर्स्ट भारत के मॉडर्न प्लांट शुरू की। Today I want to talk about a pharma company which is among one of the oldest in India. It was started by medical professionals as the Indian Pharmaceutical Combined Associates Limited. In 1964, it changed its name as IPCA Labs Limited. In 1969 in Bombay, it created the first modern pharmaceutical plant. In spite of being one of India's oldest pharmaceutical company, this has not really grown in very big size like Dr. Reddy or Sun Pharma or the others. But this company has primarily focused on exports. And the company, I have never looked at it because it's been extremely expensive. It's not a large cap company. The price is really very expensive. And what has happened is three observations came through the US FDA for their PIPARA unit of IPCA labs. It says failure to thoroughly review unexplained incidents, responsibilities and procedures for quality control were not in writing and not followed, inadequate quality control at the unit at that place. Also, its other facility has been under import alert for a long time. What this means is exports to US from IPCA labs is in serious trouble. The current price of the share is 675 rupees. The 52-week low is 671. And for a long time, IPCA labs has been declining. The price has fallen from 1034 to 671. The big fall coming recently because they made a costly acquisition. However, IPCA's lab has been continuously growing through these decades by constantly acquiring small companies at premium prices. The P/E ratio at this point is 32.6 and therefore the earnings yield is lower at 4.8. The earnings per share is 20.7 and it's practically no debt. That's just 10% of equity as debt and price to book is at 2.96. The promoters own 46% of the company, the FIIs own 11%, and the domestic institutional investors 34% and the retail investors 9%. IPCA Labs was acquired by Amitabh Bachchan and his family in the year 1975. So it was basically Amitabh himself, his brother Ajitabh Bachchan, Jaya Bachchan and an associate who had the controlling stake. So the public issue for this stock came in 1994. In 2013, the Bachchans sold. So they bought this company as a private company. The company became public in 1994 and in 2030, the Bachchans sold their 36% stake in IPCA to wholesale directors at a price of 80 crores. So 36% of this company changed their hands at 80 crores. And so there has been a lot of value creation since the Bachchans left. IPCA manufactures 350 formulations today, 80 active pharma ingredients, and among the top 20 pharma companies in India. Its business, active pharma ingredients, is 25%, formulations is at 75%. So in API, 80% is meant for exports to 100 countries, and one of the top exporters of API, active pharma ingredients, from India. It has 18 facilities. It's a market leader in pain relief, hair care therapy, diabetes, and then rheumatology, and then anti-malarial drugs. The company sells geographic mix enormously to the rest of the world. It sells to Europe 27%, America at 20%, Africa and Asia at 19 and 18%, and Australia at 10%, and rest of the world 6. What basically it means is that the India business is very low. So this company is too expensive and I will not buy it at this time. The company has fallen because it has made a bold attempt to buy a big company, that is Unichem Industries. Unichem Industries has facilities to import to US, and IPCA Labs is struggling with US because for the last several years there has been an import alert, and the American Food and Drug Agency has not given them the permission to import material into US. That is export from India and import into US, and this dominates dermatology. So they have been looking for a vehicle through which they can export into US. Unichem is another small Indian pharma company which is primarily exporting to US. So they were looking for a way to get into the US market. So what they did is about 35% of the promoter stake was bought for 1,000 and odd crores by IPCA Labs. But it's not only that, they have to acquire 26% from the public. There is a mandatory open offer. So that will cost them another 800 crores. So nearly 2,000 crores of money has to be spent in acquiring this company. This company has reserves of only 300 and odd crores. So basically, from where is this money going to come? If it is borrowing, it will be borrowing at high interest rates, and the market pushed down the stock by 20%. So by the time the acquisition is over, IPCA will have debt or would have diluted equity. Both are negative for shareholders, and the benefits of buying Unichem will take a long time to fructify, and this is why the stock is declining. 35 times earning is a bit too high for this kind of stock, given that to raise money for this new acquisition, they might have to resort to debt or equity dilution. We expect the stock to correct from its 671, and the price may be interesting around 500. So at this point of time, even though it's a big Indian company with a good track record, better stay away from it. Thank you for supporting Paisa Bolta Hai. Like this video, subscribe to our channel, and turn on the bell notification. If you have done all this, please send this video to your friends and relatives and ask them to take a look. आपने इस पॉडकास्ट को सुना, इसके लिए मैं आपका आभारी हूँ. नमस्कार, धन्यवाद, जय हिंद. पैसा बोलता है में फिर से आपका स्वागत है. मैं सिंगापुर गया था. सिंगापुर में सब भारतीय लोग मुझे प्यार से स्वागत किया, और वो जो मीटिंग हुआ उसमें तो बहुत सारे अतिथियों से मुलाकात हुई, और ये तो कंप्लीट सक्सेस हो गया. अगले मीटिंग जून 11 रविवार को हम कोलालमपुर में करने वाले हैं. जो कोलालमपुर में रहते हैं वो मीटिंग में आ सकते हैं और मुझे मिल सकते हैं. धन्यवाद, नमस्कार, जय हिंद.